Happy Friday, Chris here. Time to look at some nerdy charts so we can all get a better understanding of what's going on in the market. So what you're looking at right now is the national average of 20% down good credit on a mortgage rate. And starting here, this is back in April. Late April, I started growing a mustache. And when I started growing that mustache, we saw a very negative impact on mortgage rates. So I'm growing the mustache, and now mortgage rates went all the way up here, which is almost 7%. Technically, it hit 6.75. I saw some big national lenders like Wells Fargo and Rocket put interest rates at 6.8 and even 6.99%. So, of course, we'll always beat the market. But I shaved my mustache. So good news for us, good news for the market. Interest rates started to go down. Now, of course, I'm joking. Really, war headlines have been the primary driver. Inflation news have been the primary driver of what's going on with the mortgage market right now. But I do think the worst of it is behind us. I do feel that most of the war and inflation-related news has been priced into the market, and we actually have a great opportunity for rates to go down more than we do up right now. Of course, I can't predict the future, but I do believe a lot of the pain has already been priced into the market. So, good thing I shaved my mustache. But also is a good thing is we have really good mortgage spreads. I mentioned that in previous videos, but you look at this chart, that is this year right here. This is the distance between the 10-year treasury and mortgages. So it's roughly around 1.9% right now this year. But like if you were to look back a couple of years, it was roughly 2.5%. So like easily, interest rates could be 7.5 right now if we didn't have this improvement in the mortgage spread. A lot of that has to do with Fannie Mae and Freddie Mac buying mortgage-backed securities right now, keeping the interest rates in check, keeping a lid onto it. But right now, the mortgage purchase application index is still positive year over year, meaning this year has more housing demand than we've seen over the last couple years. So this year, we have a little bit healthier housing market. Inventory levels are pretty similar to last year. Price cuts are pretty similar to last year. But, if we can just keep the interest rates under control, we'll continue to have improvement and health in the housing market. If you have any questions about financing a home or nerdy charts, give us a call. Let us know. Happy Friday.